Asian markets mostly trading flat, just slightly in the green. Australian markets closed today for Boxing Day, so a lot of focus on the Japanese markets with that slew of data out in the morning. The attention was on the inflation data, which came in slightly disappointing. It continued to slide since May when we had a headline for a figure of 3.4%. Today we had a figure of 2.7%, so that's down from the prior reading of 2.9%. Stripping out the April tax hikes effects, we get about 0.7%, far from that target of 2%. So a lot of work for the Bank of Japan to do. We also had some soft data from the industrial production front, and retail sales both came in slightly weaker. And with that fall in oil prices, that's sapping a lot of inflationary pressures. So we might be able to see more policy easing measures ahead in Japan, which could translate to a weaker yen next year. Now, heading into the release, it looks like a lot of traders were betting on the weaker numbers. We saw some pressure on the currency, and on the news, it bounced up slightly as it looked like traders were doing some short covering. Another market making some moves is China. We saw that surge on reports that the central bank is planning some measures to waive the need for banks to park reserves for some deposits, and that will help boost the level of credit. Now, industrial sector also received a boost. There was a government statement today which guaranteed financing for exports of large equipment and encouraged lending to this sector. So the top winners today in the stock markets are the industrial names, a lot of them from China. It's also interesting to see a spike in gold prices today. They're up nearly 1% in midday trade. To put this into context though, a lot of shorting was happening ahead of today. So overall, the gold prices are headed for their second weekly decline. So a lot of profit taking today, and window dressing, profit taking are the themes to watch out for as we head to the end of the year.